Going over the trades on the day for the last trading day of the month from May 31st, 2023. Losing day minus 2,050, and the 50K portfolio is minus 380. Glad to be done with this month. It's a very challenging, very unusual month. One of the best ways I would describe this month is a month full of, we anticipated higher prices, constant stop running, propped up, fighting shorts, waiting on the debt ceiling. Very hard, unusual price action this month. And in general, the quarter, it's been a slow quarter. We are down the month about minus 5.2%, and still up on the quarter and up on the year. But disappointing month, but just unusual price action. We'll look at the price today. Oftentimes I've seen the month just flip. You go from a choppy one month is just terrible, or 1 week is terrible, and the market environment will change the next week. In this case, we've had an entire month where it's been really weird. Even on the trend days show major divergences, and so we are due for some upside. Let's look at the latest portfolio calculator. This is the latest portfolio calculator as of yesterday, and 32 strategies. Our counter trend strategies really didn't work that well this month. Some of our new strategies that we wanted to capture this kind of choppy price action didn't work too well. We had the chop in the middle of the day and trend at the beginning of the day, and the time of day bias can hurt you in this case. But in general, just a challenging month. So as of yesterday, 26,875 is the current drawdown out of 30,195. We may make some revisions. We want to manage risk. It's times like these that require patience. We want to give our strategies a little bit more room as we're flipping to a new month, and we want to catch that. The debt ceiling is supposed to be voted on tonight, and so if it's resolved, that could be off the table of thought, and then we get to a more normal market mode potentially. If it's not, if the vote doesn't go through, could have some more back and forth with the debt ceiling. So we'll see. We want to give this room a little more room. And then we can go from there. We have about 5 to 7 strategies that are our favorites. We could back off to and trade those. More of our trend strategies like AT2020, EVPs, robots. And so just a tough month. And these are the hypothetical results, minus 14,000 as of yesterday. So we beat those a little bit. And one of the things is the biggest winning day is 44.52. We are extremely due for a big winning day. And as we flip to a new month, we want to give our strategies a little room to capture a big move, a more favorable price action instead of this all-day contentious price action. This should be as of 5:30, not 5:25, 5:30, 23. So here is what the price action looked like on the NASDAQ today. You see the gap down, run up to the previous day, it's close, and then sell off, chop around here. And then Fed came out, talked about how they'll pause rate hikes, market rallied, chopped around, sold off, rallied again, sold off. Just a random intraday price action lately has really been more in line with the random walk theory, if you believe in that. I do believe in inefficient markets longer term, but this month it's been pretty random, pretty challenging to trade, and very spiky, and with lots of divergences. Like we said, the VIX was all over the place, and we have earnings after the bell. We have overbought equities like NVIDIA. Just looks like a market like NVIDIA that was just a blow off top, and that potentially anticipate that coming back down after that blow off top of those earnings. The market wanted to get to $1 trillion market cap. It got there. Let's see if it comes back down. And some profit taking is in order. One of the things we talked about is the biggest short of the year could be after the debt ceiling talks. The market's rallied into the debt ceiling talks, at least the NASDAQ. And instead of selling off and then the debt ceiling resolved and the market rallying, the market's rallied And so if the debt ceiling is resolved, it could sell off. And so that's the forward-looking mechanism that you oftentimes see in the market. And so let's look at the trades on the day. One of the things that I did at the end of the day was turn off automation for EVP1 and momentum reversal. Since this one is short and this one is long and they exit at the same time, you would just get a buy sell real quick. So I turned off EVP1 and momentum reversal since they would offset each other as they exit at 4:10 Eastern time. And so you could do that sometimes. Tick pulse, you see the short fighting here. I got short, let's fight that short. The Fed didn't help us out. Coming out, making announcements during the day. I don't know what the purpose of trying to create a rally by telling the market we're going to pause rate hikes and then just get a rally in the market that is taken back. Stopped out on tick pulse, and then tick reversal, no follow through to the short side. Continues to be the hardest market to short I've seen in a long time. Even strong bull markets are easier to short than this. There are time periods when you get strong bull markets, the markets go up, and then they come down and they go up, and you get these down days, and you can short those. Now this market's just straight up, and you get a pullback. It just tries to reverse intraday, and so really hard to short bull market. One of the things that I've thought of also is that we have a fundamental bear market that's been hijacked by excess liquidity, creating a technical bull market in the midst of a fundamental bear market, at least in the NASDAQ. You had the tick count trend. It did take a nice short trade here, and so we got a little piece right there on the short side. Momentum reversal, minus 95 on the day. Zigzag had two winners. It's been a disappointment this month. We've tried to phase into this strategy. We traded this one for a while. We paused. We adjusted it. We got back in, and it's just gone straight against us. SR counter trend stopped out on the day, and those are the NASDAQ strategies. Let's look at the S&P strategies. Tick pulse got short once again. Just fight that short. Adaptive moving average did have some success on the short side. A little bit of success. Tick count trend dynamic turnaround. Got the long trade. Tried to go short. Fight that short. Opening chop. Market's trending at the open instead of chopping now. So opening chop was down. Tick chop was down. And so we had 1, 2, 3, 4, 5 trades on the S&P. 2 for 5 on the S&P. And we had 1, 2, 3, 4, 5, 6, 7 on the NASDAQ, and we were 2 for 7 on the NASDAQ. So once again, these are the trades on the day for the last trading day of the month from May 31st. Looking forward to tomorrow's trade. We're going to risk a small amount to the worst case drawdown, risking the quarter to date on profits. Quarter to date profits as we go into the new month, looking for a flip for the market to have more favorable price action. Like I said, we've seen markets that just trade are difficult the entire month. In this case, it's been difficult the entire quarter. Coming into a new month tomorrow, debt ceiling, vote tonight, and then looking for maybe a change in tone in the market to be more favorable, and we'll risk a little bit. And if it doesn't go our way, we'll cut back, and I have about 5 to 7 strategies that I like. So those are the trades on the day for Wednesday, May the 31st, 2023.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.